Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you this Thursday morning live from the CNBC-TV18 Motorola Studios. I'm Prashant. With me, my colleagues Reema, and we've got the birthday boy with us, Nigel. Guys, good morning. Nigel, very, very happy birthday to you.
Well, thanks a lot, Prashant, as well as Reema, and thanks to a lot of people who have wished on Twitter as well as on personal message this morning. And I'll tell you what, 10 years ago on Power Breakfast, Ekta said, Nigel, what do you wish for? I said, I want everything to go well personally as well as professionally. And 2024, here we are at 8 a.m. on CNBC-TV18. And I'll tell you what, the last 10 years have been fantastic, and I hope the next 10 are even better. So thank you, everyone, for your good wishes.
And I must say that Nigel is one of the most loved anchors and colleagues at CNBC-TV18. He's every single person's friend. He's out there. So here's wishing for the next decade to be as brilliant as the last decade has been, or even better. Wishing you the very best always.
Thanks a lot, guys. We have had a lot of good times and very few bad times or off times. So looking forward to building on this rapport. And when you work for so long in the channel, everyone's like
family.
Everyone's like family. From a bachelor to a someone who got married, who has children. You talk about everything, so...
What's the plan? Where's the party, though? That's later.
Promise
Not
lunch.
today.
Lunch is done.
All right. Well, so that's a special day for all of us here at CNBC TV18. Well, it's going to be a special day or a mild and a sort of muted kind of day for markets. I think that's what we want to start with. And let's rewind the clock back to yesterday, because actually it's something very special happened last night in the US, the US markets, that is. So astounding recovery for the US equity markets. I'll tell you why. Because that's the close. S&P was up 1%, NASDAQ was up about 2% plus. US equities, the S&P was down about 1.6% early afternoon, morning and early afternoon. And then they saw a late bump, and a bump like we've not seen one since October of 2022. So actually, it's the first time since October 2022 that the S&P and the NASDAQ actually erased an intraday loss of over 1.5%. That basically is how powerful the bounce was, which essentially means that, you essentially from the day's low on the NASDAQ looking at about a 3.6, 3.7% kind of a bounce. Now, that's very large. You had NVIDIA to thank for it, not just for the NASDAQ, but for the S&P as well. It really drove gains. And you had the CEO of NVIDIA at a conference essentially talking about strong demand for their chips. Stock ended 8% higher. That's an outsized impact and a boost coming in for markets. Now, you also had macro data. So at the margin, US core CPI numbers sort of beat expectations, 0.28 month-on-month increase as compared to about a 0.2% bump. That was the consensus expectation. And by the way, after this data, actually it is off, I'm going backwards a little bit, but it's after this data that equities sold off, yields went up, but all of that reversed towards the end, as I already described. So yields by the close of it were up about 1 basis point, so 3.6%. Dollar index was up about 0.15%. 101.79 is where we left off at as well. Oil prices 2% jump. So oil's been the big talking point, but a little bit of a lift here. So nearly $70.50 per barrel is where we left off. Is the road clear for markets here in India? I think you are still in a bit of a not clear kind of a picture phase right now. Very early to say whether we are starting something on the downside. It's possible that the market just moves right back up. So let me just put the levels which will make things clear. We closed below the 20-day moving average, which stands at 24,925. We left off at 24,918. So it's a very slight marginal close under the 20-day moving average. And I would say we should not presume that a fresh move sort of lower is starting until and unless you break the swing low of 24,753. Maybe it'll never come into contention. But that, I think, is the main level, only below which you can say that maybe we perhaps are going to see that pullback, which so many are talking about, right? 4-5%. Yesterday, we had somebody saying, well, 5% is a new 10% and things like that. But I don't think we should jump the gun yet. The high to take out is the high of the last 2 days. So 2 days now, the market's got to about 25,112, which is the 61.8% retracement from the all-time high, the fall that we saw from the all-time high. Above that, you're looking at 25,333, which is the last and the prior sort of high. Now, the Nifty Bank, it managed to remain above the 20-day moving average, which was 51,003. We left off at, all these numbers are a few points, a few points under the 20-day, few points above the 20-day. But that's the kind of market we're in. The recent low for the Bank Nifty is 50,369. On the upside, watch if the Bank Nifty can take out 51,506. I want to just leave you with this astounding number, which is the Bajaj Housing Finance IPO, which closed yesterday. And the numbers are, 3 lakh crores, right? That's the amount of money which the IPO has not collected. That's the demand. But the point which I think many are making, and I think it's a valid point, is that if all that money is blocked out for a day or 2 days, when that frees up, you got all that powder sitting on the sidelines, which is available. Not all of it will come and buy stocks in the secondary market, but you've got that blocked for a day or 2 days. And that, I think, also explained what we saw yesterday in terms of flows. FII is bought, DII is bought, but you still had the market which saw a bit of a dip. And I think maybe the missing link was the Bajaj Housing IPO, which we had yesterday. GIFT Nifty will come up on your screen, and I think the first rates will indicate a 100-point plus kind of a bump. So the question is going to be, if you get that, do you chase this higher, or do you wait for at least the 25,112 kind of level to be taken out, and then you kind of go long, because it's a pretty sharp start that is being indicated. Rima.
Well, absolutely astounding, right? The Bajaj Housing Finance and the kind of subscription. So just to put it in numbers, the total subscription stands at 3.23 lakh crore. Record numbers. Even in terms of the total number of applications, it stands at 89 lakh applications seen for Bajaj Housing Finance. This is the highest ever seen for any IPO. And it was a large size IPO. They were looking to raise 6,500 crore plus, and it saw an overall subscription of 63 times. Remember, the entire Bajaj group has generated so much wealth for all the investors. So in the last 10 years, Bajaj Finance stock price is up 28 times. Bajaj FinServ is up 17 times. So, there is a lot of love towards the Bajaj group. In terms of the FIs, as Prashant said, the FIs bought in the cash market yesterday. They bought 1,755 crore rupees. This marks the third consecutive day that the FIs bought in the cash market. And yesterday, the DIIs too pumped in close to about 230 crores. So both FIs and DIIs were buyers in the cash market. Lots of things to track today. So we'll kickstart with a big block deal in Honasa Consumer, and it's been upsized from 8%. It now stands at 10%. 9 a.m. onwards, we'll be tracking the Paytm AGM. We've got a listing today, a small one, Sri Tirupati Balaji. They raised about 170 crore rupees via the IPO, but very solid subscription of 125 times. We've got the Nifty weekly expiry. It's a Thursday. We've got macro data to track at 5:30 p.m. The India July IIP and the August CPI. Out in the US, you've got the PPI producer price index, and in the European zone, ECB interest rate decision, where a 25 basis points rate cut is expected. So after yesterday's turbulence this morning, the GIFT Nifty is suggesting a 100-point plus gap up closer to the 25,000 mark. What are you watching?
Well, that's right. Before I get to trade setup with regard to the Bajaj Housing IPO, 3 lakh crore plus is the demand, right? There are only 30 companies in India that have a market capitalization of more than 3 lakh crore. So that's the kind of number, just to give a comparative, since we're talking about 3 lakh crore odd. But yesterday was a weak session. Though it was a weak session, by the time we wound up, we protected the crucial levels both on the Nifty as well as on the Nifty Bank, which is the 20 DMA. So I expect, since this morning is going to be some green, you'll have to watch out for those technical levels and hope that you buy into the dip yet again. That's the call, and that's the trade that's worked out. We have the weekly expiry as well that plays out on the Nifty, so that'll be an important moving point in the second half of trade. What about positioning? How are the FIs positioned? What about clients? Well, the FIs, they continue to remain net long, 1.5 lakh contracts on the long side. And for the hygiene check, we normally just check out what both these two are doing. The clients, mildly net short, 40,000 contracts on the short side. Moving to the other FNOQs, well, yesterday you had the Nifty Bank that was lower. There appears there were some shorts that got built into the system, which isn't such a bad thing because the flows are good, valuations are supportive out there, and over the last 1 year, that's actually been an underperformer. So the Nifty Bank is the one that holds utmost importance, particularly from a bullish perspective, because that's what could swing the tide in their favor, provided the recent lows held out. We'll get to that number in just a bit. The PCR is moving back down towards the lower end of the range. A few sessions ago, it was at around 1.4. It's come down to around 0.88 odd. I like that. What about the options data? Well, the call writers, they're feeling very confident. But this morning, we're going to get a gap up. So the bulls will want to build onto those gains, because if you build onto those gains, then these call writers will have to scramble for cover. And if that's the case, then in fact, you'll have to, you'll see the Nifty that moves up as well. So let's get the levels that come up for you on the screen right now. The resistance zone, well, that's the high that we made a couple of sessions ago before pulling back. The recent lows out there, so that'll be very, very important. And if we break that, then you look at the 50 DMA. So that 24,600 mark becomes extremely crucial on the downside. What about the Nifty Bank? The recent low is at around that 50,300 odd. You'll want it to build on and get past that 51,450 odd, which has been a bit of a resistance zone, and the highs come up for you on the screen. The stock that I'm looking at is PI Industries. Yesterday, before the market got a little bit turbulent, if you pull up the last chart year to date, you'll see that the stock actually has bounced back phenomenally. And you're getting some sales notes which are stating that the export data for the first 2 months of this quarter have been good, and the key product, pyrosulfone, well, that as well has been quite good. The stock yesterday pulled back towards the second half of trade, but since it's an uptrend, and in fact it hit a fresh 52-week high, that's a stock I think we need to track from here on as well.
All right, thanks very much, Nigel, for that. So PI industry is something you need to keep a quick sort of look at as we open and track it through the course of the day. Eric Fishwick weighs in on equities this morning. He's, of course, with CLSA. He says U.S. inflation rose 0.2% month-on-month and 2.5% year-on-year for the month of August, in line with expectations. However, core CPI recorded a 0.3% month-on-month and 3.2% year-on-year increase, which was higher than expected. Price dynamics remain favorable, suggesting that inflation on a yearly basis will continue to fall going into the end of the year. But the higher than expected month-on-month increase in August is a further argument in favor of 25 basis point cut next week. They expect a 25 basis point cuts at each of the 3 Fed meetings this year. All right, well, we have Stephen Englander, Managing Director, Global Head of G10 Forex Research and North American Macro Strategy at Standard Chartered, now joining in to take some questions. Stephen, good to have you with us here. Good morning. Thanks very much for your time. So just a quick word on the risk appetite and environment for risk, really. How do you assess it? There is the seasonality argument. Presidential years in terms of market performance is a little mixed going into elections at least. Will all that weigh, or do you think maybe this is just a very short underperformance kind of a patch and things will it'll be up and up again? What's your sense?
Well, I think that it's too early to put on too many strategic election trades, and I think that those are going to fade. I mean, even though there's a general consensus that Harris did better than expected and Trump worse than expected, the betting markets are still pretty much 50-50 as far as who's going to win the election. So that's a very difficult trade to put on at this point. I think the bigger thrust is that it's clear, and markets are pricing this, a year from now, after the September 2025 meeting, Fed funds will be below 3%. If you can have a good risk appetite in an environment where you expect policy rates to drop, 235 basis points, you're in real trouble. And I think that the resilience of the market reflects the fact that, do they do a 50 in September? Do they do it in January? It doesn't really matter. What matters is that the Fed is going to embark on a series of rate cuts, and the inflation picture is sufficiently positive, to make them confident that they can carry it through. So I think it will be a resilient market. We will have rates convergence. We'll probably get to see the dollar fall. Probably, we think, towards the end of this year and more into next year. But I think risk appetite will stay firm.
So, Stephen, 1 year down the line, as we navigate through a lot of the uncertainties, the extent of Fed rate cuts, the U.S. elections, do you think markets globally, say the U.S. markets, the mother market, will be higher? Could we see about a 10% return from here on?
I don't think that there's any reason to be at all negative on the market. I think that let me put it this way, the Fed put its back. And as long as the Fed is more concerned about unemployment than about overshooting on inflation, it means that at any sign of weakness, they'll be either increasing the policy response or going further than market expects. So, without making a numeric call, I see, I see the environment as being quite positive.
Stephen, hi, good morning, and good to see you in. Well, I wanted your view on the Indian markets. We have been the outperformers. So, what's the view on the markets? Because we're not particularly cheap right now. And also, how do you see an emerging market, the RBI? How do you see cuts follow what the Fed will do?
Well, first, happy birthday from New York, and many more to come.
Thanks a lot. Thanks a lot, Stephen. Appreciate it.
We're pretty optimistic on India. It's in a world where you have slow growth, chronically, right? We're debating how much growth was slow in the U.S. Europe is kind of stuck in the mud. China facing clear headwinds. India stands out as one of the places where growth is relatively firm. We do see the 50 basis points of cuts by the RBI. Growth will slow a little bit, but it's not going to slow materially. It should continue to be a very positive environment. I think global investors will be looking to put money into India.
Stephen, we'll leave it there. Good conversation as always. Thank you very much for joining us and running us through all of that. We'll take a quick commercial break here. We'll just give you a quick preview of the top stocks that we're going to get to you in just a bit from now. So what do we have? On the green side, we're looking at names like Tata Steel, Bajaj Auto, Hero MotoCorp, TVS Motor, Ola, a lot of auto names there. JBM Auto, NBCC and GE T&D are some of the other names we'll look at on the green. Honasa Consumer, the big block, Route Mobile is the other one, which we will track on the downside. All of that coming up with the research team in just a bit. Stay with us.
Good morning. You're watching Bazaar Morning Call, and it's time now to tell you about the top stocks to watch this Thursday morning. Our research team is standing by. But to kickstart, let's talk about Tata Steel.
Well, the steel companies are looking for any kind of good news, and finally Tata Steel has got some good news. It's basically procedural in nature because they have signed a $500 million grant funding with the UK government. The total cost of this project, where Tata Steel is looking to move into green steel, is around 1.25 billion. And out of that, they've got this 500 million secured. So it's a positive in that direction. It helps them to proceed with the electric arc furnace route. That's the EAF. So that's the transition that they have been talking about. So positive for Tata Steel. So that's why expect some tinge of green on that one. But let's hop across to Vinny. She's here to tell us about auto companies yet again. Hey, Vinny, good morning.
Good morning. So let's talk about some of these auto companies that are going to be in focus today. So Bajaj Auto, Hero Moto, Ola Electric, we have JBM Auto, Ashok Leyland and Tata Motors too. So full auto pack is what we're keeping an eye out on today. We're expecting a positive up move after the government has actually launched the PM e-drive, that was FAME 3, the name previously. Now 10,900 crores is the outlay that we're seeing, providing subsidy mainly for electric two-wheelers, three-wheelers, trucks as well as buses is what the focus is coming on, as well as electric ambulance, so the hybrid version of that. But what is missing, and what may be a bit of a disappointment, is there was no mention of electric passenger vehicles. So that is something that one should be watching out for. Other than that, the government has also launched and approved PM e-bus Seva, that is a payment security scheme, and that's all for 38,000 electric buses till 2028, 2029. So key focus is going to be on the auto pack. Surely a positive up move that one could be expecting here.
All right. Thanks very much, Vinny, for that. So autos as a pack should be watched out for. Now, Honasa is going to be in focus. There's a large block which is happening. Nimesh indicated this in his D Street Chatter segment. Nimesh, good morning. It's happening. It's a pretty large one.
Oh, yeah, absolutely, Prashant. A large one. So 11% almost equity is going to get changed hands. The book is upsized as well from 8% to 11% now, which suggests that the demand could be quite strong. But the private equity investors combine own 39% and they are selling close to 11%. The big seller is going to be Sequoia Capital. They are the large sellers in today's block deal. The indicative price is 480, which means a 8% discount to yesterday's closing price. The total fundraise from this block deal will be close to 1670 crores. The execution could be quite interesting, but the kind of discount which is there looks like it will happen in the open window. The only thing to watch is, while it's been already upsized to 11% from 8%, the key question is whether they will sell further. I'm saying this because in Indigo Paints block last week, the indication was for 11%, and the peak and Sequoia sold out entire 25%. So need to see how much they sell in today's block. Right now, it looks like it's going to be 11% and at an 8% discount. So I'll go with the red to start with, because there is a large block and the Ps are selling a big chunk today.
Thanks for the perspective there, Nimesh. Watch for Route Mobile, because there is a large block expected here too. So the company has said that the promoter Proximus Opal is looking to sell 6% stake via an offer for sale, and the floor price is at 1635. So it's not really at a discount. The stock closed at 1638. Now, promoters hold 83% stake in the company as of June. So this 6% stake sale via the offer for sale is perhaps to comply with SEBI's minimum public shareholding requirement. So 6%, but Route Mobile per se as a stock hasn't done very well this year. Year to date, it's a muted 2.5% return. In the last 1 year, the stock has only gained 4.5%, and that's because the numbers have been lackluster due to international headwinds. Today there could be some further pressure because of promoter stake sale.
Okay, all right. We'll keep an eye out on that one. But Vamakshi joins us to wind this down with some more stocks in the news. Vamakshi, take it away.
Well, good morning, Nigel, and wish you a very happy birthday today. Let me first start off with NBCC. The company has collaborated with MTNL to develop a land parcel of almost 14 acres in New Delhi, and this project is valued at 1,600 crores. Apart from that, I'm also watching out from GE T&D. The company has bagged a couple of orders worth 155 million or 1,433 crores approximately. They've received orders worth 55 million euros from Grid Solutions Middle East, and another 100 million euro orders worth from Grid Solutions France. Now, keep in mind that both of these orders are from some of the group companies that are associated with GE T&D. This is for supply and supervision of high voltage products and will be executed over the next 5 years. Overall, this development bodes well for the company, given that in the first quarter, the order inflow was quite subdued and in fact declined for 2 consecutive months. But it seems like the situation is now turning for the company, and resultantly, I'm going with the green for this counter.
All right. Vamakshi, thank you very much for that. Well, let's quickly recap some of the stocks which we put out with our team. So we have Tata Steel, The auto names Bajaj, Hero, TVS, Ola, JBM Auto, all in focus. NBCC and as Vamakshi said, GET&D will be in focus on the positive side. Honasa and Root Mobile on the negative side.
Let's get a handle then on all the action from the commodity space. Manisha Gupta joins in as always this morning. Hi Manisha, good morning.
Morning, Nima. Thank you for that. Well, some buying coming back in case of commodities, and I'll start with the crude oil prices, which is off its lows. And after the 2% gain that we've seen overnight, the Brent has regained above $70 a barrel. Well, it was slightly oversold with the kind of sell-off that we've seen in last 2 weeks. Prices still are 10% down for the month of September, but at least 70 is back. Well, a couple of reasons that you've seen buying is that the U.S. inventories have declined less than expectation, and the hurricane Francine has strengthened in Western Gulf of Mexico. Also, when you look at the crude products like U.S. natural gas, that's trading at a 2-month high, while, of course, the demand concerns from China and U.S. continue to weigh, but there is some stability that we've seen in last 12 or 14 hours coming for the crude oil prices. It's a similar case for the base metal prices, where we've seen industrial metals gain. Copper gained up by 2% overnight. Steel rebar was up 2% as well. Silver gained up by a percentage point. These metals also have been declining in the recent few days. While the U.S. inflation data, the numbers, the impact is into the market. The PPI data comes in today, and that's going to be in focus.
Thank you very much for that. We'll get into a break. On the other side, we'll get chatting with Dipan Mehta, Director at Elixir Equities, for some fundamental stock talk. Welcome back. Global cues are a lot more positive as we begin trade. Yesterday, Wall Street staged a remarkable recovery in late trade. The S&P 500 closed up with a gain of 1% after being down 1% on an intraday basis. The Nasdaq notched up a 2% rally. Asian markets are upbeat, particularly Nikkei, which is a gain of nearly 3% given the decline in yen. And the GIFT Nifty is suggesting that after yesterday's weakness, the late weakness, this morning we will have a gap-up opening. But lots of individual stocks to track, including Honasa, Bajaj Housing Finance, Tata Steel, etc. So let's invite Dipan Mehta, Director at Elixir Equities, on the show now. Dipan, morning. Thank you for joining in. First, your thoughts on Bajaj Housing Finance and the kind of frenzy for this particular name.
Yeah, good morning, Reema. And really, it is a frenzy because I'll tell you, so many friends and contacts who don't invest in equity at all, who don't do even IPO, they may have invested in mutual funds or secondary market. They have rushed into, apply for the Bajaj Housing Finance IPO. And I'm not surprised with the subscription numbers. We also have applied for the shares in the IPO category, but I think the chances of getting allotment are pretty dim. And look, this is a classic signal that we are in a very strong liquidity-driven bull market, and good quality paper is going to get bid up higher and higher and going to attract a lot of buyers. And that is what is being playing out over here. I'm sure the listing also will be fantastic, as people who have got even nominal to small allotment may try and average higher and create a significant position in a company which can always be part of your core holding, given its track record and given the potential of the sector.
Sorry, just one more question. In the Bajaj group now, you've got Bajaj Finance, FinServ, you have Bajaj Auto also, the brothers company. There's also Bajaj Holding, which is the parent company. And that's trading at a near 50% discount. If you just aggregate the market value and, the holding discount is nearly 50%. Now, amongst all the peers, I was just checking, Bajaj Housing Finance, Holding has actually done pretty well. It's up nearly 50% in the last 1 year, and it's up 35% this year itself. Is this a stock that you would look at, Bajaj Holding?
No, Reema. I think that if you go back into history, buying holding companies has never been a great investment idea, because Bajaj Holding will never unlock the value which is there over there. See, you have to compare, if there's something like an Info Edge situation where they hold Zomato and Policy Bazaar, then those are not strategic subsidiaries. Eventually, they will liquidate over there and use the fund for something else. But Bajaj Holding will never shares of any of the Bajaj Group companies. It will just remain like this generation after generation. So it doesn't make sense. In fact, one thought which comes to my mind is that Bajaj Finance itself has become a holding company for Bajaj Housing. And that Bajaj Housing business will the discount on that Bajaj Housing holdings, the investment will start to get reflected in Bajaj Finance's numbers as well. So from Bajaj Finance's shareholders' point of view, the separate listing of a subsidiary company, in my opinion, is not a very positive development. But end of the day, the jewel in the crown remains Bajaj Finance because of the kind of personal loans, the appliance loans, the kind of products which they have, and the position in which they have in the products remains phenomenal. So that's the stock pick over there.
I got that. By the way, on Deepan, hi, good morning. On that listing, bumper listing, right? The grey market premium indicates it's a doubler on day one. And then, of course, as you said, people would want to buy on day one because allotment perhaps will be small because of the response of the IPO to bulk up there. We'll see. But yeah, it's going to be a good one. Just a quick, Deepan, I don't know if you have a view on Century Textiles. I've heard this being sort of pushed from 1700 levels. Real estate play, large sort of property right here and about a kilometer away from where we're sitting in Worli. Just any thoughts on a pure market cap basis compared to the land bank? Seems to be quite cheap as compared to some of the other pure property players.
Yeah, absolutely. I think if you consider the discounted cash flows and the present market cap of Century Textiles, certainly there is a lot of arbitrage over there. And look, this is a fabulous deal which they have done. And it kind of, gives them a massive project which they can keep on developing for years on end. And the entire area also has become very interesting. Property prices in that Worli, Central Bombay have climbed to nearly or higher than I would say South Bombay prices as well. And I think there is some merit in buying into focused real estate companies, So there's a great trajectory in terms of what their revenue streams will be. And it's a quality player. We have the benefit of decent corporate governance standards. There can never be liquidity issues with Century Textiles considering the financial prowess of the group. So from many angles, I think Century Textiles does make an interesting investment opportunity.
Okay, Deepan, do stay on. We want to get to the big corporate conversation of the day, which Shireen had yesterday with IndiGlobe Aviation. Now, Indigo is aiming to be a truly global airline by 2030. This was the word from CEO Peter Elbers, who was chatting with CNBC TV18 yesterday. He went on to say that 30% of the airline's revenues will come in from the international operations this year. And the company, remember, recently announced the launch of business class. On that, he said that 40 planes will be equipped with business class seats by the end of next year. Listen in to that conversation.
But let's talk about Indigo 2.0, because you said one of the success factors has been doing the right thing at the right time. Let's talk about the decisions that you've decided to go with, which is introducing business class as well as a much sought after loyalty program finally after 18 years. Why do you believe this is the right time for both these decisions?
Now take a step back and see where we are today. Today it's 24. Indigo started to operate 18 years back. The India of today is a very different India than the India of 18 years back. And so will be the India in 5 years from now. So when I joined 2 years ago, we set a point on the horizon being 2030. Said, what type of airline does India need by 2030? And clearly the vision was India at that point in time will not only need a very strong domestic carrier, but India's role on the global stage will also be a different one. By that time, India will be the third largest economy in the world. It will be even stronger and closer and deeper connected to many other countries. That requires an airline or airlines which is size and scale, which can operate and compete on a global basis. So I think our benchmark there should be how are we doing on the global level and not per se only how are we doing on a domestic level. So all the decisions which we have taken over the past 2 years, and admittedly it have been a rather busy 2 years, but all these decisions are part of that ambition and objective we're having by being a global airline player by 2030.
A global airline player by 2030, how do the priorities change? How does the execution roadmap change at Indigo to ensure that you deliver on that promise and that aspiration?
Well, that's a very, very valid point. So the very foundation of Indigo is our domestic operation. So today we operate 88 domestic destinations. Now, if you think about, Shireen, 86% of the Indian population is living within a 2-hour drive, provided it's not raining, but living within a 2-hour drive from an
On
Indigo...
a very lucky day.
No. It's living in a 2-hour drive from an Indigo-served airport. So we have these 88 domestic destinations and a little over 400 domestic routes. So that's the very foundation of what we are. But increasingly, that is going international. So today, around a quarter of our seat miles are international. That percentage will go up to 30% in the foreseeable future, and will go up even further. So the next step, if you wish, Indigo 2.0, will be solidly rooted and deeply rooted in India, because that's what we are, and moving from there to a global stage. Therefore, we need different planes which can fly further. Next year, we get the Airbus 321 XLR coming in. That will bring us well into Europe, well into Asia, and from the southern part of India, even to Australia. That in itself requires also a different product domestically. That's exactly why we are launching, prior to the end of this year, a business class for the first time on the nation's busiest and business routes. And indeed, and we're very excited about that, we start our loyalty program by the end of this month.
You know, I'll get to the international aspiration in a bit, but I want to pick up on what you just said. Indigo's story, and many would attribute the success to the fact that it was the original lean, mean machine. Simplicity was really the driving philosophy, was driving the purpose as far as Indigo is concerned. Now, as you add these layers of complexity, I mean, business class, loyalty programs, and so on and so forth, you know, how do you change or tweak the DNA of the organization to go from that mindset of simplicity now to what you call thoughtful complexity?
You know, I think the mindset of simplicity was driven by the ambition to keep cost leadership. I mean, the simplicity was not the objective in itself. It was a means to an end, and the means to an end was cost leadership. So our ambition to keep cost leadership in this incredible competitive Indian market will remain to be there. But if the additional cost of complexity are outweighed by the additional revenues to be obtained, we should go after that opportunity. I think back to some of the earlier decisions, even today, before implementing these new decisions, Indigo is different from what it was 18 years ago. We've already sort of left the pure, simple operation. We have an in-flight magazine, we have some catering product, we fly
Tea and
international.
coffee.
No, more than tea and coffee. We have a co-branded credit card.
Yes.
We are flying actually. We fly 20 a day between Delhi and Mumbai. That's not a classical low-cost type of, diverse network. So we have corporate contracts. We work with the biggest corporates in India as corporate contracts. So that stations we have already left. But now we really want to take the decisions in time. I think there's quite a few examples in the world where companies were sort of late, not per se in aviation only, but even outside, where companies were late in recognizing how the world is changing around you. And I think the Indian world is probably one of the fastest changing worlds, one of the fastest changing countries in the world. And we are, believe, well positioned to benefit from that.
Well, that's an interesting conversation and a very clear-headed, sort of logic-driven answers to that set of questions by my colleague Shireen, and we'll play out different parts of that interview through the course of the day. I mean, leadership in the skies and of course leadership in the markets as well. Although, I mean, there isn't that much competition in the listed space for Interglobe. Deepan, do you own this one?
Yeah, absolutely. So, whatever you're going to ask me about Indigo, my views are biased. I think it's a phenomenal investment at this point of time, a great secular growth story. And with oil prices coming down, it eases some of the cost pressure on the company. And I think that as Indians are traveling domestically more, over the next 5 years, a lot of travel will take place abroad as well. I think, so according to some survey, the millennium and the Generation Z want to do at least 2 or 3 overseas trips, not to mention several weekend trips. And that certainly is going to increase the demand for aircraft and flights. And look at the competition. I think it's a two-player market, and that certainly will give some amount of pricing comfort and pricing strength to the existing players. So very positive on Indigo, sort of poor June quarter notwithstanding.
Deepan, just one more name. First Cry saw a bit of a move yesterday, 5-6% higher. Recent listing, it was not a blockbuster listing or anything. And Nimesh yesterday on the chatter told us day before that there is some accumulation happening from some of the smart investors. Any thoughts here?
No, Prashant, the likes of Nykaa, I would say, and even First Cry, I'm not that optimistic. I'm not that positive at the present price levels. I think they're very expensive at these levels. These companies, they're not platform companies. So when you look at investing in new age businesses, you want to buy platform companies which can scale up quite easily and can benefit from operating leverages. These companies have got very high variable costs, that being the purchases which they make, what they sell on the portal. And these businesses are very difficult, I think, in my opinion, to get solidly into profit. I mean, end of the day, as investors, we want secular growth, momentum when it comes to profitability. I'm not sure about that. Also, competitive intensity will keep on increasing for such products. So I would avoid First Cry. I would avoid even Nykaa for that matter, and similar businesses.
Okay, all right. Deepan, hold on. We want to ask you about a few more stocks. But for the time being, let's hop across to Anuj to tell us how trade setup is looking like. Anuj, take it away.
Nigel, morning. First of all, Nigel, wish you very happy birthday. I am not carrying my lunch today. I'm expecting that,
Absolutely,
you would
Anuj.
sponsor it.
Absolutely, Anuj.
And Nigel, really wishes for the day. And I've seen you grow. You've grown so much. I'm so proud of you. And all the best to you. Keep doing well.
Thank you, Anuj.
Let's talk about the market now. And I think the question that is on top of my mind is this some kind of a global reversal? The US market yesterday, could it have made a hard bottom? And you saw a big recovery from the lows of the days. There was stunning recovery, actually. I think that would play out in IT stocks in the first half today because NASDAQ led that recovery. So IT stocks could lead the first half rally. If the bank nifty joins in the second half, I think then we might see a trend day. If, however, today's gap up fails, then it will be a big negative for the market. So you've got to be prepared for all eventualities in the market. The India VIX yesterday was up 1.93%, and the put-call ratio has fallen to 0.88. Why am I pointing out to these two numbers? Because the place is right for market to have a perfect short covering day. And we were also very close to a crucial support level of the 20-day exponential moving average. On the Nifty, the levels to watch, the first resistance, 25,114. To 25,125. This is where yesterday's highs placed, and this is where the options data is also suggesting you have some resistance. After that, you have 25,216 to 25,275, the recent highs. The first support, obviously, yesterday's low in the 20-day mark first, 24,875 to 24,950. And then the bigger support is 24,750 to 24,800. On the bank Nifty, the first resistance would be 51,400 to 51,500, yesterday's high. And then if you cross that, 51,800 to 52,000 chart-based. First support, 50,900 to 51,000, yesterday's low and 50-day exponential moving average. And the bigger support, 50,300 to 50,500, the 100-day exponential moving average. I'll leave you with the quote of the day. And since it's Nigel's birthday, I have taken slightly lighter quote. The fairy tales do not tell children that dragons exist. They do. That's what the children think. But fairy tales tell children that they can be killed. So never let the child inside you die, Nigel. Have a good day.
Absolutely, Anuj. I've kept it alive, and it's been great learning from you over the years. And yesterday you said that September was good because you came to Mumbai. September is great, right? I love it.
Absolutely.
Thanks a lot for that, Anuj. Well, time to move on then. We'll take a short break. Come back. We'll have our technical experts with us. Nitesh and Sudarshan are waiting for us on the other side. You don't go anywhere. Welcome back. Hope you're having a good morning. Well, Deepan Mehta is still with us. Deepan, I wanted to ask your view on Honasa. We're bracing for a large trade where the PE is looking to exit some part of their holding. What's your view on the stock? It's holding at around 520 odd.
Yeah, Nigel, I think Honasa also the product of this bull market. There is so much of euphoria around it, and it's got excellent coverage. The promoters are very media savvy. They've been able to explain the business plans very effectively. And I think it's attracted a whole host of, I would say, new generation investors who are also maybe consumers of the company as well. Everything looks to be fine over there. It's into a products where it has a long way to go, those products, when it comes to getting maturity. So they will certainly get volume growth for the next several years or so. But look, I think a lot of the positives have been captured in the P multiple. It's going at about 134 times or so. And I don't think those kind of P multiples are sustainable. And from that point of view, I think a correction is, or at a point of time when the P multiple narrows due to higher earnings per share, that may be a good entry point. But one should keep an eye on Honasa. It's a business which has got a differentiated business model and differentiated products as well. So from that point of view, I think it'll always remain a growth company. And I think we prefer a growth company, so we have an eye on it. It's just that there's a discomfort when it comes to valuation.
Deepan, Root Mobile, Have you looked at the stock? Now, the latest news is that the promoters is selling 6% stake via an offer for sale. They had already sold about 2% stake last month. So with this, from 83%, they will come down to 75%. So they comply with the, SEBI norms. There's just two things. One, it's the floor price is at 1635, so very close to where the stock closed. So it's not coming at a big discount. And two, because the stock has underperformed, it's only up 2% year to date. Was this a bit of an overhang that the promoters will be coming to the market to sell to bring down that 75% stake? And now that it's out of the way, maybe it opens the floodgates for the stock to do well. Is this one way of thinking that you would agree?
No, Rima, actually, first a disclosure, we have invested in Route Mobile, and it's been a disappointing 12 months, no doubt. But before that, the track record has been good. But, the company has now has become as part of the Proximus group. And I thought it was a simple industry, but it is getting more and more complicated as we study it. I'm not able to understand the competitive dynamics in it. Sometimes we hear that some telecom companies also want to offer similar product. At the same time, there is a shift away from SMS to WhatsApp and other digital channels, and that transition is something which companies like Route Mobile and Tanla Solutions need to manage. And there's always a scope for new entrants in this business as well. I'm not sure that there's adequate moat in this business, but and performance also, frankly, last 3-4 quarters have been very disappointing. So from that point of view, I don't think it's the overhang of the promoter selling which is keeping the stock price pinned down. It's more to do with the changing dynamics in the industry, and I would say a very stagnant performance, which has dented the sentiment not only in Route Mobile but the other listed company Tanla Solutions as well. So I just like to wait and watch and see the next 2-3 quarters are very important for this particular segment and this sector. And let's see if growth comes back. Otherwise, I think the valuation may not be sustainable.
All right. Deepan, we're going to come back in just a bit. Let's get some technical ideas out of the way as well, right? Mitesh and Sudarshan are with us to help us with those. Gentlemen, good morning. Good to have both of you here. Mitesh, is it a bit more clearer in that sense, the path ahead, or still ranged and not very clear, even though the GIFT Nifty is indicating a 100+ point bump at the word go? What would you do?
Good morning, Prashant. So, I was advocating that we might not have a correction, but more of a consolidation with around 24,800, 830 as the lower end of the range. We kind of hit that and are bouncing back from there with a gap up opening. Now, while there will be a gap up, since I still believe that this is a market which is contracting, we might not have the strength to go and, start making fresh highs or even testing the earlier highs immediately. The idea is that we'll see a choppy market between 24,830, 800 to about 24,150. In the best case scenario, 24,300. So the market is range. You need to apply these kind of range strategies. You won't have bought overnight. So maybe after the gap up, you don't need to buy immediately. See if there's an intraday pullback of about 50, 60 points and then keep stop below 24,800 and then try and take a long over there. But overall belief is that this is a market which will chop around within a range.
Okay, we will slip into a short break on that note. We'll come back. And okay, before that, let's also get the stock picks from our expert. So, Sudarshan, what would you go with this morning?
Well, let me talk about the Nifty first. Okay?
Go ahead.
Oh, all right, thanks. See, my view is that we are in a consolidation, but within that consolidation, we should be looking at every opportunity to go long on a dip. Now, today, after a gap up, usually the idea would be not to chase the gap up, but I think today could be different. Therefore, if we see a shallow dip, I would be a buyer. Keep a 75-point stop loss from wherever you enter this market, and that's a very tight stop loss, but expect a trend day today. So there are two buying opportunities. One is if you have a shallow dip, and the second is if after 10 a.m. the market makes a new high, intraday high, then go and buy that breakout also. So I am willing to be long in the Nifty today.
Okay, all right. Fair enough. What we'll do is we'll take a quick commercial break here. We'll come back and we're not taking a break. What we'll do is, apologies for that. Apologies for the confusion. We're going to go, let's get the technical trading ideas from both Mitesh and Sudarshan. Mitesh, you go first. What do you have?
I have all buy calls today. Havells is a buy with a stop at 1930 for targets of 2020. It was a buy yesterday as well, and I think today we should see more continuation on the upside. That apart, REC is now at support levels. We have had some sell calls on PFC and REC. Now at support levels, REC can be bought with a stop at 554 for targets of 582 to about 585. Polycab gave a intraday buy signal, so buy here with a stop below 6775. Look for targets of 6950. And Tata Consumer is a buy. Keep a stop below 1190. Look for targets of 1230.
Okay, all right. Now, let's just, Sudarshan, what about you? What are your trades?
Well, yes, I think there's some confusion about the breaks that you want to take. All right, quickly. Havells is a buy. It's very strange. Even I have Havells as a buy and Videsh had Havells. That means we are looking at the same stock exchange and same companies. It's an excellent positional idea. Buy with a stop under 1920. Oracle is a buy. You know, IT stocks have gone all over the place. Their strong uptrend has started there. Buy Oracle with a stop under 11,200. And Zydus Life Sciences from the pharma sector, these are the knowledge sectors that are now doing well, is a buy with a stop under 1100. I have one intraday short and try to be skeptical about intraday shorts today. Sell Gujarat and Narmada Valley Fertilizer with a stop above 680, but focus on the buys.
Okay. Gentlemen, now we get into that, break. Thank you very much for the index and the stock calls. When we return, we'll come back and get you the pre-opening rates. We'll also connect with Abhishek Gaushinde, Deputy Vice President Research at Sher Khan by BNP Paribas, to decode the trends in the auto sector and the latest EV scheme.
Welcome back. This is Open Exchange, and we are coming to you live from the CNBC-TV18 Motilal Oswal studio. Well, a good time to get you some derivative strategies. Chandan Taparia joins us to help us out with just that. Hi, Chandan. Good morning and good to see you, Ben. Well, tell us, what is your call on the markets, first of all, and then we get to your picks.
Good morning, Nigel. Thanks for having me. And wishing you a very happy birthday.
Thank you.
So, talking about the market, the Nifty got stuck in a range. However, on the last week, it formed a bearish engulfing, but managed to hold support near 24,750 and witness some recovery. The concern is that follow-up is missing because of the weakness in the global market. So we are likely to be in a range. The broader range for the index is likely to be in between 24,750 to 25,333 zone. So we are likely to see a consolidation, but major trend is positive. So we will go with buy on decline stance in the Nifty index. Now looking at the Bank Nifty, here also we have seen a wider swing. But the good part is it has been holding above its 50-day mark. So as of now, the broader range for Bank Nifty is likely to be in between 50,500 to 51,500. So in both indices, Nifty and Bank Nifty, major trend is positive, but absence of follow-up is missing. So we have to be with positive to range-bound bias in the market. Now looking at the stock specific, first is buy on Havells. And this is one of the strongest counter coming on the radar of all the analysts. The stock has given a 14 weeks long consolidation breakout and has been making high rise, high lows on the daily chart from last 3 days. We have seen built up of long positions with some short covering now. Rollovers were better, which indicate that now momentum could be seen. So one can buy with support of 1910 and Havells can head towards 2060 marks. Second trading idea, that is buy on Bajaj Auto, one of the strongest counter in Nifty Auto Pack. It has given a breakout and has been making high tops, high bottom on the weekly chart. On daily chart, it has also given a breakout from a small pole and flag. We have seen a build-up of long position by around 7 to 8%, and the stock is holding with sustained delivery volume. So one can buy Bajaj Auto with support of 11,150, and we are expecting an upside move towards 12,000 marks in this auto counter. Last trading idea, that is sell on Canara Bank. Most of the PSU banks are witnessing sustained selling pressure, and Canara Bank is having weakest structure. It has been making lower top, lower bottom, and given a lowest daily close in last multiple days. So stock is trading at 7 months low, given a decisive breakout below 105. So further weakness could continue. One can sell with a stop loss of 105, and this PSU name can drip down towards 96 to 95 zone.
Okay, thank you very much for that, Chandan. Havells is now a consensus recommendation from all our morning guests, from Mitesh to Sudarshan and even Chandan. But let's talk about Engineers India Limited. Now, they had a chat with CNBC-TV18 and they said the order book is at an all-time high of 11,300 crore rupees, And the company is expanding its wings in the high-end infrastructure sector across geographies. Abhimanyu caught up with Vartika Shukla, CMD of Engineers India, to discuss the growth outlook and the expansion plans. Listen in.
EL has always been evolving as the businesses and the technology evolves. In today's time of energy transition, we are there in the space of green hydrogen. We've already executed some projects, and some projects in green ammonia are also under deliberation. Besides, we've also spread our wings to the high-end infrastructure sector, geographies as well, wherein we have added on and enhanced our volumes of businesses in Abu Dhabi office, re-entered Bahrain, Kuwait, gone in Guyana, in Algeria. So there are a lot of other sectors and other geographies we have looked. Besides that, we are also very actively involved in dialogue with the private sector investment, both in India and globally. And we hope to build on the excellent work that we've done in Nigeria for Dangote Refinery, which is one of the world's largest refinery, running very well. And those credentials are class apart in themselves, and I'm sure with that we are going to grow both domestically and globally.
How is the current order book placed like? What are the kind of strategies you're looking at with respect to collaboration with other companies in different sectors, be it defense, aerospace, or even several other subsectors like CBG?
Sure. So as of now, our order book is almost an all-time high of 11,300 crores. And we are actively working for some of the defense production units. And we are in dialogue for expanding our footprint there as well. For CBG, we are intending to put up 2 CBG plants based on agri-waste. And we are also actively pursuing other clients for taking us on board as project management consultants as well.
All right, well, let's focus on the auto sector now. The government has approved rupees 10,900 crore PM e-Drive scheme to push electric mobility. The scheme will be replacing the FAME 2. Abhishek Gaushande, the Deputy Vice President, Research at Sharekhan, who joins us on the show. Hi, Abhishek. Good morning and good to see you. Well, tell us what is your reading of this new proposed scheme and how does it compare with the past one?
See, broadly, if you see that the overall allocation has been in line with the street estimates or whatever with the numbers the media reports have been quoting. And in terms of that 10,900 crore rupees, what has been allotted is similar to that of like 11,500 crore kind of allocation was there in the FAME 2 scheme. But what is different here is that this scheme is more diversified and taking account the new segments like ambulance and the e-truck segment. And given that in the previous scheme, around 85-86% of the fund was allocated for demand incentives. Compared to that, in this scheme, around 33-34% of the fund has been allocated for demand incentives. So it's and second thing is the PV segment has not got any kind of a mention in this scheme. Further, the major focus has been on the PV bus segments and overall you can say the CV segment, including the electric bus segment. Along with that scheme, that government has also approved this payment security mechanism scheme and allocated roughly 3,400 crore rupees. So what I find that this payment security mechanism scheme is more beneficial for the EMAS players or the electric bus players like JBM Auto, Ashok Leyland, Tata Motors, etc. Because earlier they were being some kind of hesitance to to participate in this EECL orders, but now when this payment security scheme would get placed, I think the participation from OEMs or the bus operators in the EECL orders or the EMAS scheme will increase going forward.
So there are 3 basic differences, Abhishek. So one, the outlay is slightly lower, 10,900 versus 11,500 in the prior scheme. The current scheme is more diversified. It covers electric charging stations, etc. And the third is it doesn't cover four-wheelers, right?
Yes. Yes.
Okay.
And And the one thing which still requires the clarity that how much fund they will allocate for an individual product. So say, for example, in the EMPS scheme, the incentives of up to rupees 10,000 rupees or 50,000 for two-wheelers and up to 50,000 rupees for three-wheelers has been allocated. So that clarity is still to come out in the market.
So is it possible to quantify the discounts per vehicle compared to what it was? Because now it's more diversified, right? So there's going to be less money which goes necessarily for two-wheelers, three-wheelers, etc.
This is most likely, and further that in this particular scheme they are targeting more number of vehicles compared to the previous scheme. So obviously the per unit incentives may come down from what has been offered earlier.
Abhishek, will this help revive sales at all at the margin? Are you building in some sort of recovery? Because they've really stagnated now.
What kind of a recovery are you saying?
For EVs, for two-wheeler EVs, do you think, are you seeing, because I mean last month was particularly bad, and actually for the last many months, EV sales have stagnated. Penetration has been around that 5-6% kind of levels. So I'm just, will this help, and at the margin, how much?
See, one thing is now clear that the scheme has been would be in the market for next 2 years. Compared to that, earlier they were introduced this EMPS scheme for the 4 months and then extended for 2 months. So in that way, the OEMs and the customers both will get clarity. The month-on-month volatility has been seen because of the lumpiness in the volumes, because customers purchases the vehicles in a lumpiness in the last month of this when this earlier schemes got ended. So as we have seen a lumpiness in the March, and after that we have seen a kind of a consolidation. So now that lumpiness would not be there. Second thing is that post this reduction in the incentives, most of the two-wheelers have also introduced products at a lower price point. Say, for example, earlier most of the players were focusing on the 3 kilowatt hour kind of a product. Now they are launching this 2 kilowatt hour kind of a product, or in the pricing in the range of around 1 lakh rupees, which is quite comparable to the existing ICs. So in that way, the positioning has been quite clear, and I think that adequate incentives have been offered for a certain period of time. At some point of a time, this incentives will definitely get moderated, and EVs have to attract the customers on the basis of the utilities what they are offering. So things are going in that way only, and I think at the beginning of the introduction of all these policies, that was also aimed.
Yesterday, BMW cutting the guidance, Abhishek. How would you read the implications for the Indian listed players? Have you made any EPS cuts or changes?
See, we have to understand that why this BMW has cut down its EBIT margin guidance. It has cut down EBIT margin guidance from 8 to 10% to 6 to 7%, largely because of the two key issues. One is that it has got some issues with the integrated braking system, and because of that, it will have to incur a large warranty liability in a Q3 of this calendar year. And because of that, its EBIT margin in the Q3 would get impacted, and that would lead it to a cut down its EBIT margin guidance for the whole year. And the second thing, what it has said along with that is that because of this, its delivery schedule will get impacted, and it has been facing some volume growth constraints in the China region. So, overall volume guidance, earlier it has given a slightly increase than that of a quarter FY23, and now it is saying a slight reduction in the volumes compared to FY23. So it's a company-specific issue, largely with the BMW only. And given that the underlying assumptions for its peers, including JLR and all that, so JLR has also indicated for a 30 billion pound kind of a revenue for FY25 with around 8.5% kind of a margin. I think that would not get impacted directly because of this this commentary came from the BMW. One thing is that both these players have a different kind of a customers, different kind of a products, and different kind of a competition in multiple geographies. And second thing is that this vendor issue which BMW is facing is not directly linked with any other player or any other player. So I don't think it would have a direct impact on its peers.
Noted that point. Thanks a lot, Abhishek, for joining in and, in fact, giving us your view. Wishing you a good day ahead. But it's 9:10, so let's get Sudarshan and Mitesh back in. Sudarshan, what's your 9:10 call?
Consider buying Zydus Life Sciences with a stop under 1100.
Okay. Got that. I just want to highlight that there is some news flow, which obviously Sudarshan is not aware of. Our colleague Ekta is telling us that there is and we'll put the details out in just a bit. The US FDA has come out with a warning letter after inspecting one of their plants for Zydus Life. So just FYI, but that's a technical call which Sudarshan is putting out. Just thought I should make a mention of it because we'll put out details as we go along. Mitesh, what about you? What are your trades?
I'll have a buy on REC as a good candidate from bounce back from support. So keep a stop at 554. Look for a 582, 585 kind of a target.
Okay, all right, fair enough. Thank you, gentlemen, for that. Kalyan Jewellers is the next one that we want to focus on. Mangalam is here with details. Mangalam.
Well, jewellery stocks have been a buzz for the last couple of weeks itself. And in that, Kalyan Jewellers in the last couple of years has rallied about 8 times. And HSBC has written they believe that it's still in the middle of its value creation journey. Because if you look at the way Titan has created value, it's a useful catalyst to track long-term growth for Kalyan Jeweller itself. They see clear potential from their current 200 odd stores to quadruple over this decade itself. And as a result of which, if you look at the valuations at which Kalyan trades, 56 times, which is about 10% discount to Titan, it's appealing if you pit it against all the other consumer opportunities. So they've, factored in faster growth in their stores and a lot of their own stores coming in as well. That would be a margin lever. And as a result of which, they've upped their target from 600 to 810. Just as an aside, remember 15 days ago when Warburg sold their stake in the company, promoters had upped it by about 2.36% as well. So that's another trigger for Kalyan Jewellers. The stock has done well, as per HSBC, likely to do even better.
Thank you very much for that. Unbelievable, right? 8x return in a span of just 2 years. That's Kalyan Jewellers for you, but still trading at a discount to Titan. Sonal now joins in for specialty chemicals and why she's watching these stocks.
Well, chemical stocks, they'll be in focus because the export data for the month of August is out. Phillip Capital has put out a note and it does not look like a good number. The chemical export momentum turned weak in the recent month for a number of reasons. First, there was a single-digit quarter-on-quarter drop in exports for the industry. The reasons are a number of them. One is shortage of containers. Second is lower demand, geopolitical tensions, and also Chinese supply aggression that continues to be the case. Company-specific, Aarti Industries, the exports were at 174 crore rupees, which was a decline of 44% on a month-on-month basis. Q2 so far, there's a decline of 28% sequentially, 11% on a YY basis. This was led by 38% sequential fall in monomethyl aniline exports, which is a major export product for the company. And that's why the brokerage has gone ahead and they've cut their EBITDA estimates for FY25 and FY26 on the stock. Atul Limited exports at 175 crore rupees. Q2 so far, it's a decent uptick, 5% sequentially, 40% on a YY basis. Phillip Capital has gone ahead and increased the target to 8,500 rupees. For Vinity Organics, Q2 to date exports at 121 crore rupees. In the month of August is 121 crores, which is an increase of 38% YOY, which is primarily driven by growth in the ATBS segment of around 43% and also butyl phenol and their antioxidants business. For SRF, the exports are down 2% on a sequential basis. Q2 so far, it is down 10% on YOY basis. Yes, there was a recovery in specialty chemicals, but the other businesses didn't do so well, and that is the reason why there was a downtick. So overall industry didn't do so well, and that's why these stocks will be in focus today.
All right. Thank you very much for that, Sonal. And good to get that. Well, just a couple of seconds to go as well. That's the opening bell going off. What do we have? It's a higher start, most definitely. 1/3% in the Nifty Bank, I can see. 0.4%, so we are at about 25,022 at this stage. That's a 0.4% pop. The sensex is up almost by that much as well. 81,820. Bank Nifty is up a third, 51,166. Mid-cap index is even stronger with a full near 1% gain. On the NSE Nifty Mid-Cap 100 Index. There you go, 600-point bump, 59,535. The heat map is all green, only 3 names in the red. There's Asian Paints, Nestle, and ICICI Bank. Tata Motors is undecided, no change, and everything else is starting up higher. So 25,025 is the start, and on expected lines this morning. Let's see where we go from here. Rima.
Superb opening for the mid-cap index. So the mid-cap index is a gain of 1%. The Nifty small-cap index is also opening up with strength. That's up 0.8%, with the advanced decline ratio boasting of 8 stocks advancing for 1 in the red. Sectorally, metals are leading the charge. The Nifty Metal Index is the top-performing index today, 1 1/3 higher for the Nifty Metal Index as the dollar came under pressure overnight. This is followed by strength in the PSU Banking Index. That too is up nearly 1%, and IT is strong, drawing strength from that 2% Nasdaq rally. In terms of individual stocks, it's Tata Steel. They've secured that $500 million funding. So Tata Steel is up 2.5%. Hindalco giving it company on the way up. Shriram Finance has been moving well off late. The stock has gained, it's up today and it's up nearly 3% this week. Bharti Airtel is consolidating above 1600. And in terms of IT names, it's Tech Mahindra, LTI, Mindtree higher. BPCL, which reversed its gains yesterday to close in the red, has opened up with strength. So 1.3% up on BPCL. And in PSU banks, it's State Bank of India, which is higher. On the way down, you've got M&M opening in the red. Perhaps some disappointment because this time there is no subsidy scheme for EV four-wheelers. So M&M is down 0.5%. Nestle is seeing a bit of a correction. But again, Nestle has had a good run. Nestle is open in the red. Asian Paints too correct. I think Asian Paints has been closing up higher for the last couple of days. It's had a one-way run for, I think, 5-6 days now in a row. So some profit booking visible in Asian Paints and ITC. But all in all, straight away off the bat, we're above 25,000 on the Nifty, 100 points higher. Sensex surging more than 300 points, with the broader markets outperforming.
Well, that's right, Rima. And, a few stocks that should be on a radar. Honasa, Nimesh tells us that large trade has taken place. That's up for you on the screen. 10% equity changing hands. Explains why the stock is down close on 5%. Because the deal happened at a bit of a discount in comparison to yesterday's close. So that's one of the top volume movers because of that large trade. Prism Johnson, law of gravity seems to have caught up. The stock is up close to 30% just in 2 sessions. It's down close to around 3% odd. Let's see whether or not there is something material in the offing, whether it's with regard to a corporate action or some other rejig of the business. We'll have to wait and watch. For the time being, the stock is down 3.5%. So keep an eye out on Prism Johnson. The other big movers, you have Varun Beverages. Something's got into that one. It's up close to around 5%, flying away as we speak. So big move is what we're seeing on Varun Beverages. Suzlon Energy, dream run is what the stock has seen. It saw a bit of profit taking. Now in the last few days, it's moving almost circuit to circuit, up 5% even in today's trading session. Inox Wind as well is up close to around 3%. So good move out there. And the metal pack is bouncing back a little bit. It got a bit of a dropping yesterday. Last couple of sessions was a little bit weak. Vedanta is moving on high volumes. A good up move out there. Rima already mentioned Tata Steel. Zomato as well is participating. Zaggle as well on the upside. So Zaggle and Zomato, both of them, they seem to be moving very, very well. And they're back in the interest list of a lot of buyers. And both those two stocks opening up with high volumes on the upside. The other one that we're looking at from the frontline names is Oro Pharma. Blazing away. So just keep an eye out on that one. Oro Pharma is doing very well in this morning's trading session. And just to highlight one more name, PI Industries, we had highlighted the stock earlier today. It's been making fresh 52-week highs. Yesterday, it saw some profit taking. The sales data that's come out is looking pretty impressive. So we'll keep an eye out on that one. A stock that's making fresh highs is something you should keep an eye out on.
All right, so we got a 120-point pop now on the Nifty. We're at about 25,035 on the index. So holding the gains that we started with. Now, just a few more names before we get in our market master of the day. Electra is coming up with another 4-5% gain. It's got very large volumes as well. It's number 2 on the NSE volume board. 1689 on Electra. Look at the 500,000 plus shares there. Zaggle, we mentioned. Zaggle was a big 10% pop yesterday as well, 4% today. Nazara is coming up with a 3% gain. So 992 on Nazara. Nazara, I think, was also on D Street Chatter a couple of days back. So there's action there. Inox Wind is starting 2.5% higher, 244. There is LIC Housing Finance, which is up 2.5%, 692. PNB Housing as well, I saw. PNB is, almost re-rated or in the process of re-rating because it's done very well this month. I think about 20% so far this month itself. So we've got what else? I think Then MTNL is up about 4%, and smaller names. EPAC continues its charge higher, 324, 3.25% in the green, and so on and so forth. On the downside, there is, I think, only Honasa, which is a noticeable large volume-led loser. Raymond is coming up with some volumes as well. Raymond is down 3%, 1860, and there is some pressure. And Piramal Pharma has had a bit of a one-way kind of a move. So it moved up from 175 to 230 or so very quickly in 10, 12 trading sessions. And that is seeing about 1.25% lower. Prism Johnson, I think Nigel mentioned, was a big mover yesterday. It's pulling back about 2.5% as we start. Century Textiles has been the other big mover recently, and that's about 1.25%. These are just sort of, day on day kind of pullbacks or whatever you want to call it. But just retracements. RR Kabil is another one, big mover yesterday. There is Ecos Mobility, which has rallied quite a bit after listing recently. So that's the kind of market we seem to be in. 115, 120 points higher is what we have on the Nifty.
Some more stocks. MGL is up nearly 2% today. Jefferies has raised the target price to 2,120. They're saying there is a volume growth improvement in Mahanagar Gas. So that stock is opening up with strength. Kalyan Jewellers, which Mangalam highlighted, where HSBC has put a target price at 810. That's opening up with strength. Other housing finance companies too are higher, whether it's LIC Housing Finance or Aadhar Housing Finance. That entire pack continues to gain ground. And even Route Mobile, where the promoters with the offer for sale will bring down their holding to 75%. Despite that 6% expected sale of shares, supply of shares, Route Mobile has opened up in the green today.
All right. Well, so that's essentially the lay of the land with what's up and what's down, what's moving. Ashish Gupta is Chief Investment Officer at Axis Asset Management Company. Ashish, good morning. Great to have you with us here on the program. Thank you very much for your time. I want to start with what I think is pretty close to your heart as well, which is financials. And more commentary around the fact that maybe large private financials and their time is nearing in terms of for them to do well. Because everything else has done so well, and here there is some valuation comfort and et cetera, et cetera. Just wanted to start there. Are we at the cusp of something, or you think it's going to be a regular kind of sector with and one should really hope for any outsized kind of gains, maybe relative outperformance from here? What are your expectations from the space, large private financials?
Morning, Prashant. No, I agree with you. I think what we have clearly seen in the past few months is the participation in the market moving to sectors that had lagged. So if you see in the last couple of months, sectors like healthcare and IT have done better, despite really no dramatic change in their growth outlook. Maybe some of the concerns that were there on the IT sector growth have receded a bit, but really there's been no dramatic upgrade to earnings. And on a similar sense, I think the financial sector does look, as you mentioned, fairly attractive in terms of valuations. I think what is really needed is the overall liquidity environment to improve. More than really even rate cuts, I think the central bank stance on liquidity is very important, because I think that is what has been holding the deposit growth back. And lack of deposit growth has pushed banks to pull back on loan growth. So I think as that changes over the course of the next 6 months, given the fact that inflation is in control, I think financials should do better. The other factor I think that should play out more favorably is the fact that there were some concerns on the unsecured loan business in the past few months, and you would have seen the June quarter earnings. A few NBFCs and banks reported an uptick in delinquency there. The feedback we have from the credit bureaus, from the bounce rate, various companies are reporting that the situation is also stabilizing now. So I think both these factors should contribute to better performance from the sector. Of course, a huge re-rating also seems unlikely, because the earnings growth trajectory will be moderate because as rates come down, bank margins will also moderate. So I don't think there's a huge case for an earnings upgrade driven de-rating, but I think a valuation catch-up is certainly overdue.
Ashish, hi, morning. Rima here. Your view is that markets do remain overvalued across the investment part of the economy, and we may see normalization in these segments. So is your advice now for retail shareholders that perhaps we should book profits in some of these infrastructure, capital goods, defense, power, which have done exceedingly well in a very short span of time, and perhaps look to allocate it to some of the underperforming sectors? Is that the advice?
No, I think one part is certainly that we have to go where the earnings upgraded earnings surprises will come. And if we look at the June quarter earnings, actually, we saw these sectors continue to drive earnings. So overall earnings growth for corporate India moderated. If you look at Nifty, earnings that were down to single-digit percentage, but actually these sectors did have better earnings growth. So I think if I have a 2-3 year view, these sectors will continue to do well. So I would not really recommend that switching out of these sectors and move into defensive. But given the valuations, we have to be in stocks where we have confidence about the earnings growth actually coming through.
Okay, all right. Hi, Ashish. Good morning and good to see you in. Nigel on the side. Ashish, I wanted to ask you a view on PSUs. They were the toast. Everyone loved them in the last 3-4 years. You made big money out there. But off late, they've been underperforming a little bit. Anything you'll still like in the PSU basket? Some of those sectors went out of whack, but some of them, there are still some tailwinds. How are you all placed?
Yes, so I agree. I think there were two real reasons for the PSU rally. One was the re-rating that happened, and second was the uptick in performance. If I look at several PSU companies, their growth outlook is still very solid for the next 2-3 years. So if you look at PSU companies in the power sector or the defense sector, I think their growth outlook for the next 2-3 years is still very positive. Some of the valuations may be expensive, and therefore there is some correction that is underway. But we still feel confident that over the next few years, these companies will do well because the growth tailwinds are there. We are not as positive on PSUs where there is not as much turnaround or that are more cyclical. But I think the PSU pack where there is 2-3 year growth visibility, I think that we are quite comfortable with.
Ashish, recently Axis also launched a consumption fund to just take advantage of increasing incomes, urbanization, basically India's expanding consumption patterns. In this consumer basket, how would you pick stocks?
So I think one thing we have really seen over the past 3 years, that even as the narrative played out that consumption had lagged the overall investment side of the economy, within consumption, there have been companies that have been benefiting from changing patterns, and the patterns could be related to what people consume as well as how people consume. Right. And I think that really opens up a vast array of opportunities. When we are talking about consumption here, we are actually not limiting ourselves to, say, one segment of consumption like FMCG. So when we talk about consumption, we look at the entire wallet share of the consumer, and that could be his spend on, say, even real estate. It could be his spends on tourism, travel. It could be his spends on automobiles. So it's actually a fairly wide basket. where people allocate their spends to. And we find that even as there is some cyclicality in the mass consumption side, and it had a delayed recovery post-COVID, there are companies where you are seeing much stronger trends even through this. And that is the big opportunity, and particularly now where we are in terms of the per capita income and the inflection point in some of the product categories.
Ashish, just to pull back a little bit from sectors, etc., and the market itself, there's inflows, not a problem, right? So much money, as you can see from that Bajaj housing demand, it's just there. The domestic bid is so strong, so there are no dips. I mean, small dips, 1%, 2%, 3%. That's it. On the other side, there's a lot of supply as well, and you must be seeing pretty much all the deals, right? IPOs and otherwise. How is this going to balance out? Do you think supply at some point it'll all be easily absorbed, or will it at the margin start to overwhelm, keep markets under check? Briefly, if you can sort of weigh in on that. Yeah.
Sure. So I think that's a fair point. I think markets, as we know, are self-correcting mechanism. So if there is a strong inflow or demand for stocks, the supply also goes up. And we have seen the supply go up from various pockets. Supply has gone up, as you mentioned, because there have been large IPOs. Supply has also gone up because there have been very large private equity stake sales. Supply has also gone up because even promoters, both domestic and multinationals, have sold into this valuation expansion. So I think today, if I look just last 6 months data, supply is already in excess of the net inflow into mutual funds. But the fact that even the FII numbers have turned positive this year, there is very strong domestic retail interest into the market has meant that the market uptrend has continued. So I think we are seeing further acceleration in supply. So the IPO pipeline over the next few months is actually even larger than what we have seen year to date. So we have to be watchful. And my take is that just because there is some consistent inflow into mutual fund and insurance companies, we should not be complacent that there cannot be any market correction. Because when sentiment turns and when some of the discretionary pockets, which are the FIIs and direct retail, pulls back, this magnitude of supply will be difficult to absorb.
Thank you very much, Ashish, for your thoughts and insights on the markets and individual sectors. Great chatting with you, and look forward to more conversations. Let's invite now Prestige Estates. Remember, recently the company raised about 5,000 crore rupees via the QIP. So to discuss the way forward, Irfan Razack, CMD of Prestige Group, is now with us on the show. Mr. Razack, morning. This is Rima here. So what will this 5,000 crore of fundraise be used for? Is this for expansion solely in the residential segment, or are you looking at expansion in the hospitality segment? And also, is a separate listing of the hospitality business on the cards?
Good morning, Rima. First, yes, we have raised this capital. Of course, it comes with a lot of responsibility. We have that much more now pressure on us to see that the company performs well and gives results as we go along. Part of this, 1/3 of this capital raise will be used for retiring debt almost immediately. And rest of it will be, 1/3 of it will be used for business development, and the balance will be used for infusion into various SPVs and general corporate purposes. And I believe that is the way ahead, and that's what we had planned, and that's what we had told in the beginning, and that's how we are going to handle this. Of course, we'll also have a lot of internal cash flows as we go along with the type of launches that we keep coming as per the plan that we have. So all in all, I believe the company has a huge responsibility to use this amount properly and to see that it has the growth capital for future.
your debt was nearly 8,200 crore as of the last updated figure. You're going to use 1/3 of the QIP proceeds to raise debt and perhaps some more from the cash that you generate. By the end of this fiscal year, FY25, what would your debt number look like, according to you?
I mean, I can't predict now, but obviously, if you ask me on the debt equity ratio today, with this capital raise from 0.65 to 0.7, we would have come back to 0.2. And with this cash, there will be net debt of only about 3,000 crores. And of course, we'll be retiring a fair amount of debt, both from this capital raise as well as from the cash flows that we come from the internal accruals. And then, yes, we need money for growth. We need money for business development. So a portion of this money be used for that.
Mr. Razak, hi. Good morning and congratulations on a successful fundraise. Lots of interest there and quite incredible, actually, the amount of fundraising which is going on and you know, how the depth of the market is just quite amazing. Just a quick word on the second part of Rima's question in terms of, you know, new SPVs. Is it all the other 1/3? Is it going to go into residential purely, all of it? And in what way? As you said, SPVs, etc. I mean, if you can give us some more color.
Yeah. See, the last 1/3, as I said, business development, when I talked about it, it's to buy land, and that's to see that our residential business is fueled and we have a proper pipeline in the various cities that we operate in. The last 1/3 is our contribution to various SPVs. When I said that is we companies also in the business of creating assets, both office, retail, as well as hospitality assets. And there will be a contribution that is required for that. So that's where this balance money will be utilized. And that will give us that stability and less dependency on more debt.
Could you tell us, you know, you must already have land parcels that you want to buy chalked up in that sense. And you know, you would have sort of worked towards raising a certain amount of money to buy a certain amount of land. Could you give us a sense of what we are looking at, which cities, and some idea about from these land parcels that you would buy, what's the revenue potential going to be? Big numbers, broad numbers, but just to give an idea.
See, now the thing is, I cannot at this moment tell you what will be my revenue from the lands that we acquire. But when we filed our DRHP for capital raise, we have compulsorily to also list out that this has to be utilized. And we have listed out half a dozen lands where the company is already in discussions with or signed MOUs. And that money will be utilized for those particular lands. The details are there. Now, offhand, I can't give you a breakdown exactly how much is going to be used for which land, but it is in various cities. It's just not Bangalore. It is Bangalore, something in even in Mumbai or even in NCR. So this is where it's work in progress, and I'm sure that's give the company some very large revenues on top, right, as we go along.
All right. Hi, Mr. Razak. Good morning and good to see you on the show. I want to focus more on the Mumbai market. When I go for my evening walks, I see good progress at your Bandra project. You know, so if you could, and there's a lot of interest out there, mind you, the high ticket ones. So tell us more about that. What are the, ticket price of these flats at Bandra? Also on your Marine Lines project, because there's a lot of demand out there as well. So what's the potential revenue, the ticket size, and how you see this revenue recognition on both these two projects?
Well, I'm glad that you've seen this firsthand.
Yeah.
The mic that is the ocean has really met some good favor from the customers. We've also built a customer experience center with a show flat, which has been well liked. And the good news is we've sold more than half of this, almost 60%. The stock inventory has been, in fact, what was like on the other towers where we'll have inventory. So it's a good thing, and we've got approval for both the towers. That also gives us a good feeling. And importantly is we started construction. So it's it's going to be quite a challenging task building, but I'm sure we'll reach there as the schedules. So also in Bandra is that's the Pali Hill project which you talked about. Even that has been quite challenging in terms of the terrain and everything else. And the team is really focused to see that we get off the ground and move ahead. And responsibility to the existing people who trusted us and for redevelopment. And they'll be also closely watching that how the progress is and soon can they get their new homes. So that's how it is. And the sales has been good. In fact,
so just out of curiosity, what's the average selling price of the Bandra Pali Hill and the Marine Line project? Because you've sold most of it. And
I think the average selling price in the Marine Lines, that is Ocean Tower, is around between 80 and 85,000 on carpet. And similarly, in Pali Hill is up to about 95 to 105,000. So that are the broad outlines. And of course, initially we started it for a number, but then it's now firmed up nicely. And I think the demand is still good, and we are looking for quality customers in both these projects.
Okay, all right, Mr. Razak. Well, every project comes with its set of challenges, but as you said, demand has been very strong. We wish you well, and I'll keep an eye out on that Bandra project as well when I go for my evening walks. All the best. Thanks a lot for joining in.
Thanks.
Let's focus on JMDC. Now, the stock from the start of this year has been a bit of an underperformer. It's corrected considerably from the recent peak, but the management in their annual report has given a big guidance by 2030. They are talking about revenues in excess of close to around 14,500 crores. To discuss business momentum, how they look at diversification, what's the way ahead, Mr. Rupan Singh, the MD of the company, joins us on the show. Hi, Mr. Singh. Good morning, and thanks a lot for speaking to us here on CNBC-TV18. Well, that one-year chart came up for our viewers on the screen, and the stock went to 500 rupees, and from there, it corrected a little bit. So we're going to break this interview up into three pieces. You know, your core business, the diversification plans with regard to the coal mining, and then the rare earth opportunity. So let's focus on the core business first. What's the lignite pricing looking like? It's an off-season because of monsoons, but do you see a bit of a pickup from here on? And what is the volume target for FY25 and FY26?
Okay. Thank you, Nigel. We have solved a problem which we were trying to solve for the past 2 years. That was how to manage the monsoon sales and monsoon production. Earlier, we were not able to produce, stock, and sell. This year, we were able to stock 6 lakh tons of lignite and offload it during this time. So, of course, the quarter is yet to be over, but we have sold in excess of what we sold in the entire monsoon quarter last year in 2 months only. First quarter, you know the results. It was an improvement of 4 lakh tons over the previous year. There, we have solved the mystery of monsoon sales and production. We stock up and we sell during this time. This year, last year was again a year of great challenges. The prices collapsed and 3 of our mines struggled. 2 because of production issues and 1 because of capacity expansion issues. With new leadership, with the new chairman, all these issues were resolved. And you would have seen an uptick in our performance, physical and financial, from the last financial year.
Okay.
So that is a journey that we are continuing. The number that is currently flashing on the screen is 6.3 million tons. This was a year of crisis. But then again, even with these with the compressed production figures, we churned out a 3rd best financial year in the history of the organization.
Mr. Singh, you know, which have rightly pointed out the volume number for last year, which is an abnormal year, only 6.4 million tons. So let's get the number for this year. Give and take everything that you're saying, what should you end FY25 at with regard to a lignite volume target? And when do you get to that 12 million ton that you're talking about? Which year?
Okay. So we have budgeted a 10 million ton goal, which is aspirational, but we see ourselves comfortably in the 9 million plus zone. H1 would be ending soon. We are fairly comfortably placed.
Okay, 9 million tons from this year, we'll hold you at that number. The other big trigger is going to be coal mining. Now, you have been allocated closer on 3 blocks, I understand. And you have a big aspiration out here to get into coal mining, which the street is quite excited about. And you've made some progress as well out there. So give us a few details. What is the total coal mining reserves that you have? By when do you start mining coal? And give us a couple of numbers. FY26, how much of coal can you mine? FY27, how do you see this ramp up on a per annum basis?
Okay, very, very clear plans. We have 3 blocks, 2 advanced stage of development, Baitarni West and Burra Pahar. The reserves are approximately 1.5 billion tons of coal. Out of this, extractable reserves are roughly half of it, 750 million tons of resources. GMDC already has a strong presence in Orissa. We are on ground in these 3 places, including Bhubaneswar, the state capital. We have a very important public hearing lined up on 24th September. We plan to break ground with our most prestigious mine, Baitarni West, in Q1 next year, and Burra Pahar by Q2 or Q3 next year. So in 26, we see groundbreaking and production of 1 million tons, and their peak rated capacity is for Baitarni West, it is 15 million tons per annum, and for Burra Pahar, it is 6. So we plan to reach these numbers for Baitarni by 2030 and for Burra Pahar by 2029. That is the biggest value and easiest value unlock after expansion of our lignite projects.
So you said 15 and 6. So by 2030, you should be mining coal of around 21 million tons, 15 plus 6. Is that a fair estimate? Is that the target? And also, how does the margin difference? What is the return ratio target that you're looking at? IRRs, if you have a number in mind.
So our management, our board has given us a clear mandate. There is a floor and a ceiling. So we are targeting a return of 15% on these projects. And while you would have also seen in the news, GMTC has inked an MOU with our state power utility GUVNL for downstream integration of the entire coal from these 2 blocks for energy security of Gujarat. That would be 4,400 megawatt. These plants will take 4 to 5 years to come up. In the meanwhile, GMDC will be selling this coal in the open market and ramping up its production to meet the requirements of these power plants.
So 21 million tons by 2030, right?
And I'm still not speaking about, haven't spoken about the 3rd block, which is an unexplored block.
Yes.
It is far away. It will take 2 years for exploration to get completed, and then we will take it towards operationalization.
Got that. Mr. Singh, so 21 million tons is the target of coal mining, right? By 2030.
Yes, and if the 3rd block
that will be additional, over and above this.
That will be over and above this. I can't give you clear figures on that, but a strategy on that would be available in a year from now. That again has a peak rated capacity of 5 to 6 million tons per annum.
Mr. Singh, good morning. Just to, you said there's an important public hearing on the 24th of this month.
Yes.
So all this is dependent on which way that goes, or this is just a formality?
Both ways, it's a formality, but it's a very important interaction and outreach with our stakeholders.
Which is the locals, right? I mean,
the locals. And
yeah. And has there been any opposition to this? I mean, has there been any problems with regards to the plans?
We have been very well received in Orissa, and GMDC has adopted a very novel approach about solving these blocks, since it is not our home state, and we had a comfort earlier training of working in comfort of our home state. So we have adopted a CSR first strategy. When we got blocks, our CSR division was the first to open up employment training centers, taking care of community needs, taking care of health needs. We have been on the ground for a year. That gives confidence with our stakeholders, with our partners, because these the locals are going to be integral part of our journey of prosperity.
All right, Mr. Singh, couple of quick details then. You have a target of 14,500 crores, which seems a very, very tall ask because you're looking at revenues go 4x from what you've already delivered. How confident are you that we get out there? Or, and also if you could tell us the rare earth opportunity. By when does those numbers start kicking in? If you can't give us a number, at least give us a timeline. By when do we hear some kind of progress on that front?
Okay. Nigel, big numbers, but they are based on very solid foundations. There are three pillars of this growth. One is deepening this existing lignite business, which we know very well. We know our customers very well. We know how to ramp it up. So a major part of the capex is going to go there, and the largest amount of revenues are going to come from there. Say in excess of 7,000 crores is going to come from there. This is our home state. We are very confident. Again, there is an agreement for large volume of takes in 3 to 4 years with our state power utility. So this is very sure. This is a very sure bet. The coal blocks, these are auction blocks. GMDC, and if you delay an auction block, there is a penalty. If you activate early, like what GMDC is planning to do, there is a rebate on the premium that we pay. GMDC is going to work towards a strategy of working to gain 12 to 1,500 crores of rebate in till 2030. So this early activation strategy is in line with that. If we are able to activate early, like I said, next year and start monetizing it, we would have paid for the land acquisition for the bigger project through the rebates only. So that is the strategy. Finally, we need money to take care of the environment and plan for the future. Critical minerals is the play. We have been nominated by the government of India for a rare earth asset. We will be releasing details soon to you.
How soon, Mr. Singh? The rare earth opportunity for the last many quarters, every time we have to push you a little bit. There's a big promise out there, and you've specially mentioned it in your annual report as well. But tell us, by when do we hear about the next big announcement on rare earth?
Next big announcement soon, but by 2028, we should see numbers clocking in. Before that, there's a lot of hard work, there's a lot of capex outlay, and a lot of activity on the ground. We will keep you updated.
And 14,500 crores is the target by 2030, right?
Yes.
And you have such a big aspiration. What about capex? You're lining up capex of 3,000 crores per annum. Your cash flows, operating cash flows are nothing close to that. So there'll be some debt component, or will you be looking at bringing a strategic investor? Explain the funding about that. Capex, we have 3,000 crores per annum. What is the peak debt, and is there a strategic investor coming?
I'll answer it in the debt equity ratio mode. So in till 2030, with this capex and a lot of debt that we will be onboarding, which will be in excess of 2,000 a year, 1,500 a year, the debt equity ratio never goes above 1. It touches 0.9 for 2 to 3 years, and that's it. Then it starts leveling out. Funding, where do we fund it from? While for the greener initiatives, for these critical minerals, we shall be approaching the markets, and there is good cheap funding available there. As far as our core business is concerned, a large part of this capex, we are in advanced talks with our state government-owned non-banking financing company, GSFS, that would be taking care of these solid fuel assets. So these are the plans on the table.
Okay, so we leave the conversation here for now. Thank you very much for joining in. By the way, Tata Motors slips again. Yesterday it was down 5.5%, and this morning it started. It's currently down close to about 2%. Maybe some disappointment on the PM E-Drive, the subsidy scheme for four-wheelers not being a part of the latest news flow. that stock is under pressure. Get into a break. On the other side, we'll connect with Atim Kabra, Director of Business Development and Strategy at Astra Micro.
Okay, the market's right there where it opened with about a 95-odd point pop, and things are sort of holding, but not so far. It's just too early, I think. It's not even 10 o'clock for the market to really catch a big trend one way or the other. So we'll have to watch this. 25,018. Remember, the day's high last 2 days has been about 25,112. That's an important technical sort of barrier to cross, and it's not been able to do that. So that goes, and then we can probably sort of rest more comfortably and look at higher levels. Astra Microwave is the next company that we want to talk to. The company has signed a MOU with Premier Explosives for a strategic alliance to develop and sell multiple products jointly. And let's talk about this more with Atim Kabra, Director, Business Development and Strategy at the company, Astra Microwave. Mr. Kabra, good morning. Thank you very much for joining us. Prashant here. Could you tell us the scope of this?
Morning.
Good morning, sir. The scope of the MOU that you've signed, what products that you want to work on together, what are the timelines here like, how much would you invest, and ultimately, what's the addressable market here that you're looking at?
Sure. Let me tell you the philosophy behind this MOU. I think together is a very powerful concept which can give life to a vision of complete Indian-made and designed products, not only for India, but also for the world at a very, very competitive pricing. And I think we are fortunate that Mr. Chaudhary and Mr. Gupta at Premier Explosives share the vision which Astra management has. And together we can create complete products using our respective expertise. Now, when I say this, I think it is fair to say that the government has given a significant impetus to the industry. And it is now up to us how we seize the moment and work together to create products which are built on our respective niches and core areas of operation, helped and put together by the various defense labs and the DPSU, who have all been a part of this beautiful ecosystem which has been created. So that is the vision which has been guiding us to put together this MOU. And it feeds into our LEAP strategy, where lean and learn, and node, which I call a network of defense enterprises, which is an informal network which we are trying to create, where people can come together and develop on their respective niches to create this product line. So that has been the core philosophy. On the products which we are talking about, Astra is in the process of developing a few nice products which have huge applications not only in the Indian market but also global markets. And these products are very well complemented with warheads and detonators and the propellants, which Premier has expertise in. So that's how we are looking at it. In terms of numbers,
is this, Mr. Kabra, is this a more enabling kind of a MOU which gives you the optionality to work, or specifics, etc., are yet to be worked out?
Specifics in terms of numbers are yet to be worked out. As you very rightly put, it's an enabling MOU. But we have a few products which are clearly identified, on which there is a meeting of minds, that we can put together our respective expertise in these products and create a completely different paradigm together.
Stay on, Mr. Kabra. That's the listing of Sri Tirupati Balaji Agro. This is a company which is engaged in the business of manufacturing and selling large flexible bags, industrial packaging products like woven sacks, woven fabric, narrow fabric tapes, etc. It's a positive opening. Sri Tirupati Balaji's first stick is with a gain of about 18%, 97 rupees versus the issue price of 83. It's a small company. They raised about 70 crore rupees via the IPO. They will use part of the proceeds to repay their debt. 83 was the issue price. The stock is listed at 97 rupees. It had seen very strong subscription, close to about 124 times. So we were expecting a positive kind of a start, and that has played out, 17.5%. But Mr. Kabra, you said that you have identified certain products, right? At least in the initial phase, which you will develop as a part of the MOU. So can you tell us about those products? Name them. For these products, what is the total addressable market? How soon will you be able to come in the market? And what's going to be the division of revenues in the investment?
Okay. I'll give you the broad categories if that's okay with you, right? Okay. We are talking about missiles, right? So as you know, multiple players in the defense industry have entered into the missile space, right? Okay. So if you have the propellants, if you have the defense electronics, and if you have the control systems and the exterior shell to deliver the entire package, you're talking of missiles. So now they are complete, and rockets, for example, are the low-end version where we can actually add in homing systems, RF systems, and guidance systems to make sure that they reach the intended target. And you've seen the efficacy of these rockets, which has been established in the ongoing wars in Israel, especially, and as well as in the Ukrainian-Russian war. We are talking of protection systems where we can check with the radars and identify incoming objects and take countermeasures which can be provided by Premier Explosives, right? So together, it's actually we are limited by our imagination in terms of how important these protection systems have become in this new era of electronic warfare. So these are few areas, and we are in the space business. Astra has a sizable order book in space business. We can create space-grade products. Premier has a presence in the space business where they make rocket propellants, right? So together, again, that's another area where revenue can be generated. But to your point, it's nothing immediate in terms of revenue impact. Our guidance is there for the year. But if I have to put in place sizable business blocks, which will deliver significantly higher business in the forthcoming years, I think these are steps which are necessary and in the right direction.
So you maintain your FY25 revenue guidance of 1,000 to 1,100 crore rupees? Would you like to narrow it? Will you end at the upper end, lower end? Because in percentage terms, it's a very wide range of, I think, 11 to 22%.
We hope to be in the upper end, towards the upper end. Yeah, I think 1050 plus should be the target. Should be easy.
All right.
Yeah.
Hi, Mr. Kabra. Good morning. This is Nigel on this side. It's always good interacting with you. Mr. Kabra, I was just looking at the shareholding pattern of Premier Explosives. And there's a Mr. Atim Kabra who holds stake out there. Is it you?
That's me.
That's
so it's
you.
a very deep relationship as an equity holder, which I've had with them when I've been holding it for more than a decade and a half program, right? Yeah. So there's a comfort level, and I've seen Premier grow into a very, very significant strategic company. And so therefore, making the call and putting it all together was relatively easy. But it's not restricted to, I just want to add, it's not restricted to Premier alone. We are in conversations with multiple people, and actually on your show also, people like I am progressive leaders like Mr. Munjal of Paras, etc. Have already come in and have spoken about the need to grow through moves into different areas.
No, the reason I ask you is because, that's a very important role that you have as well, because you're heading Astra, and now, there is a bit of a collaboration with Premier Explosives. And since you've been a holder for close to a decade, as you just told us, you understand the company well. So do you think there are further business opportunities for both these two companies going ahead? Could you all stitch a deal between the two or something on those lines?
No, I don't think anything, if you're referring to a merger or acquisition kind of a thing, I don't think anything like that is on the cards. Okay. We are completely separate businesses, but our strengths are complementary. And I have friends across the industry, various founders, right? And I think to the credit of the industry, I think everybody is sharing this vision of node network of defense enterprises coming together to create newer products. It's just a step which I've taken here.
Just wanted to clarify. So you're heading Astra, but you're an investor in Premier Explosives, right?
I'm a director at Astra. Significant equity holder in Astra. Small equity in Premier. Yes, so I've known the managements.
Got it. Appreciate you, Mr. Kabra, joining in, and congratulations, on this recent deal opportunity. So wishing you all the best, and we look forward to chatting up with you, maybe post you declared your Q2 numbers as well. Well, time to get Mitesh back with us. Mitesh, it's 10 a.m., but unfortunately we have slipped a little bit from the top. Your view on the Nifty and a couple of stocks, if you could share with us.
Good morning again, Nigel. And it's a mild dip. Actually, it's not a very severe dip. But what is good is that the Bank Nifty, I think, that's where some kind of strength might come in. So I think I expect the Bank Nifty to head towards 51,400 again and possibly even test 51,700, 750 levels. So we look at some banking names. In fact, HDFC Bank does feature on my stock list today. That's a buy with a stop below 1640 and look for targets of around 1690 here. And the other stock is all within the pharma. I think that's given a good reversal after a few days of pullback. So buy here with a stop at 1530 for targets of 1600 plus.
Okay, we'll slip into a very short break. On the other side, we'll invite Manisha to focus on the commodity market. Stay tuned.
Okay, welcome back. Let's shift focus to the commodity markets now. Manisha is here with what she's got her eyes on. Commodity in focus. Manisha, good morning.
Morning, Prashant. Thank you for that. Well, I'm looking at nickel, a commodity that we don't talk about very often, but this is an important ingredient when it comes to steel and also EV batteries now. And for the nickel prices, for the intraday market, we've seen prices gain up by 2%, and it's off 5-week lows that it was trading with earlier. And this has happened after an important statement from Russia's Putin saying that they are looking, that the Moscow should perhaps look at considering limiting exports of uranium, titanium and nickel there. Well, if you look at nickel, we have seen these exports are being limited in retaliation to the against West, is what also Putin says. Now, interestingly, Russia is the world's third largest producer and exporter of nickel as well. The largest quantities clearly come in from Indonesia and Philippines there. But when you look at the prices herein, we have seen, while some reaction there, but from the highs of this year, we still are much lower in sense of prices there. So from $21,615 a ton, the level that we saw in the month of April or May, the price is currently trading at $16,100. Before this, the prices also have seen a decline to almost $15,500 as well. So a bit of an uptick coming in on your screens because of that. Interestingly, Russia produces 8% of the global nickel production there. Indonesia has become the largest producer. 5 years ago, Indonesia was perhaps 25 to 30%, but now 50% of world's nickel clearly comes in from Indonesia. But the thing that's bothering the markets is the market surplus, really. There have been various reports suggesting that there is nearly 9,28,000 ton capacity expected to come online in the next 3 years. Also, when you look at Fitch report, it says that the nickel global surplus stands at 253,000 tons at this point in time. If you look at the demand from the EV market there, well, that has been constantly surging, but so have been the supplies for that matter. In 2018, the EV demand was at around 60,000 tons. It's estimated that by 2025, it would reach 665,000 tons as well. So for the longer term, by 2025, the expectation is that you could be looking at higher prices going forward. But until then, it's between $18,000 to $24,000 a ton that the markets do believe that the nickel prices could sustain going forward.
Manisha, thank you very much for that. So nickel is what's on Manisha's mind today, and that's commodities for you. Let's move forward and get back to stocks. Honasa is what we want to put the focus on once again. That big block got done. Nimesh is here with details. Nimesh.
Hi, Prashant. So, as you said, big block got done. The stock is under pressure today, and expectedly so, because it happened in the open market. Nearly 11% equity got changed hands. We had indicated that the private equity investors, including Sikoa, was a big seller in today's block. I understand there is a good demand, so it's a mix of both domestic and FIs who've participated in today's block. Interestingly, if you look at the shareholding pattern, the mutual fund exposure is quite low in Honasa. So, looks like some domestic mutual funds were buyers because they got an opportunity at these levels, and it was a large block. Interestingly, now there is a 60-day lockup for the investors to sell further. The combined holding of all the private equity put together is close to 39%. Sikoa owns close to 23. The investors have sold 11% today. So there is further 26% which can be sold. So there will be supply overhang, but not for the next 60 days for sure. But need to see as to who all have participated in today's block deal. So 11% done at a discount, and hence stock is under pressure.
Okay, Nimesh, thank you very much for that. Down about 5% or so. The market was coming off a little bit, was up about only 70-80 points. It's moved back up 110 now. So 25,000 plus on the Nifty is what we have. So, I mean, just to revisit some of these names here, Zaggle is up another 5% after yesterday's 10% move. JBM Auto, we highlighted in the morning, that's up. It's moved up to being up 4. Aurobindo Pharma is up about 3.5%, 1560. Although Aurobindo was there in the morning as well. Keynes is up 7%. So I think it's moved to the high point of the day. 49.80 on Keynes Technologies. Moti Sons is coming up. Small jeweler, 5% higher. 246, 247 on Moti Sons. And I think this week's been good for the stock. Inox Green is up 2. Gravita India is up 3. I think La Opala is up 2.5%. And just some of these sort of big volume-led gainers that are coming up on my screen. We'll take a break. We're back with our special segment. It's the economy. Lata will get chatting with Tata Steel's MD and CEO, TV Narendran.
Hello and welcome to a special session of It's the Economy. Special because it's coming to you from the sidelines of the All India Management Association's convention. I have with me Mr. TV Narendran, who has just taken over as the Senior VP at IMA. Mr. Narendran, thank you very much for your time.
Thank you, Lata.
But these are economy questions. And the big question confronting the economy is this flood of Chinese imports. In fact, it's becoming a global problem. EU has also imposed its tariffs. Now, the heavy industries minister spoke about between 7 and 12% tariffs. You think that's good enough?
Well, at least it's a good beginning, because it's a problem which we last experienced in 2015 when more than 100 million tons of steel was exported out of China. It's the same thing happening now. And the big problem is they are selling steel at prices at which they are losing money. And this is having its impact on the rest of the industry across the world. Other countries have taken action, and I think India should certainly look at taking some actions.
You know, during the results presentation, you told Nigel that even at that point, the Chinese steel was losing money at about $50 to $60 per ton.
That's right.
It still continues at that
Absolutely,
level?
it does. In fact, since then the steel prices have dropped. To some extent, the iron ore and coal prices have dropped, and that's helped support or limit the losses, let me put it that way. But the problem is acute, and the financial statements of the Chinese steel companies state the obvious. And the chairman of the biggest Chinese steel company, Bao, has also himself said it publicly that the industry is in very bad shape in China. So I think we should not let them export their problems to us. I mean, that's a fundamental point.
You know, Naveen Jindal, when the minister said that it will be about 7 to 12%, Naveen Jindal said that's not enough. What is a good number according to you? 15, 20, what would be the right number?
No, I know this is a difficult one simply because there are a lot of steel consuming industries out there who like low steel prices, right? So I think it's about finding a balance where the industry can make reasonable profit so that it can reinvest that money to build new capacities. India is blessed with iron ore. Why should a country like India, which is blessed with iron ore, be importing steel? You know, it's quite ridiculous. So I think the point is, we have iron ore. We shouldn't be exporting iron ore and importing steel. We should be converting that iron ore into steel. We should be a big exporter of steel.
It should be ours. It should be our terrain. But 17%, that's what some brokerage reports told us.
I think it's like this. You know, honestly, in this industry, unless you make a 15 to 20% EBITDA margin, you will not have the cash flows required to build new steel capacities. Because building steel capacities is a lot of money. It's $1 billion, a million tons roughly, right? So you need that 15 to 20% EBITDA margin, and otherwise you will not be able to build capacity. You can survive, but you will not build new capacities, and India needs new capacities.
I'll come to that EBITDA per ton.
Yeah.
I'll go from economy to the micro. But just to finish this argument, how is China looking right now? I mean, it's about 6-8 weeks since we spoke to you after your results. Has it improved or has it gotten worse?
I think it's not improved, certainly. The problem is being felt in China as well. Most of the Chinese steel companies continue to lose money. There are some closures of capacity, but the demand is also not recovering. So the problem is there. And while the steel industry is an example of what's happening, but I think this is applicable to all industries. I mean, so I think as other countries are also seeing, we should have a view if somebody like China is exporting a lot of whatever they produce at prices that kills the local industry, what should be our view? Should we allow it? Should we not allow it? And which is what the EU is doing, the US is doing, Canada is doing, everybody else is doing.
Yeah, I know EU has gone with for solar and for EVs. That's true. But yeah, as you say, there is the local unit, steel using unit, which will be rejoicing when import prices are lower. But to come back to the demand situation, how is the demand situation in India? Will it be hit if you got this tariff and prices became higher?
I don't think so, because prices have dropped $100 in the last 6 months. Okay. The demand was fine 6 months back. So I don't think anything is going to change that way. I think the point is in India, well, the demand is reasonably strong. It reflects the GDP growth rate. This is a lean quarter because of monsoons. Construction activity is a bit low, which is typically where a lot of steel goes. Auto has been going strong, but of course, just now we're looking at the stocks and dealers, etc. But otherwise, auto has been strong for the last few years. We look at commercial vehicles, slow down a little bit.
MXCV was slowed down for the August number.
Passengers slow down a little bit. Two-wheelers look strong, which means the rural economy looks like it's better. So overall, steel consumption is okay, but we are not able to export because international prices are so bad. In fact, that's another problem.
But how is global demand?
Global demand is okay. Some parts like the US is fine. Europe is still struggling to recover. Middle East, Africa is not bad. Southeast Asia is okay.
But you're getting undercut.
Absolutely. I think the problem which we are facing, everyone else is facing, right? And hence they're closing borders.
So this quarter margins could be lower than Q1?
Well, yes. But like I said, coking coal prices and iron ore prices have also dropped. Coking coal has an impact on our costs. It's not dropped enough. At today's steel prices of what it is, I think coking coal should be much lower, you know?
No, 13,800 rupees per ton, if I remember right. Second quarter EBITDA per ton.
Yeah.
it could be how much lower, you think?
I won't give you a guidance because
But the delta could be lower, you think?
Delta could be lower, which is what we guided in the last
You did.
analyst call. Yeah.
Yes. What about Netherlands? Even in Netherlands, you were EBITDA positive.
Yeah.
Will it remain positive but at a lower level?
Yeah, so it will be positive. I think in Netherlands last year was a bad year for us because we had one of our blast furnaces down for a relining. That blast furnace is back. We are back to full production. So our internal challenges that we faced last year are no longer with us. We are operationally running well, but the markets are bad. Again, a reflection of what's happening in China and elsewhere. So yes, it will be positive EBITDA, but obviously margins and spreads are squeezed because of what's happening.
So if you want to guide us for FY26, do you think by then, because of volumes, you will be able to do a better EBITDA per ton? What can you guide for 26 and 27?
Sure. I think the critical milestones for us this year, one is UK, moving ahead with the transition plan. That will at least stop the bleed for us in UK because that was a big negative for us. Netherlands, which was traditionally positive but last year negative, will be positive this year and will continue to be that way. Obviously we are concerned about the margins because of the market. In India, the big milestone is getting the Kalinganagar expansion completed. The blast furnace should start in the next couple of weeks. So that's a 5 million ton expansion. So most of that volume will come through for us next year. Higher volumes in a high fixed cost business like ours means more competitiveness. So yeah, so that's where it is. So I think in all three major sites, we should see some positive developments.
But UK will be positive by the end of this year, you think? Will the losses stop or does it take?
We had expected to be EBITDA neutral in the second half of the year, but we are still again watching spreads and margins because that was assuming normal spreads and margins. But we're watching that, but certainly you will not have the bleed that we've seen in the first quarter and you will see in the second quarter.
You aren't finding buyers for Netherlands or UK and UK?
So Netherlands was always a cash positive, EBITDA positive business, okay? And hence there was an interest from Thyssen, from SSAB in the past. As you're aware, because of competition commission issues and various other issues, it didn't manifest, it didn't happen, right? So I think we are now focused on creating our own future for Netherlands, and UK with this transition, we think can stand on its own. Netherlands always stood on its own, didn't need support from India.
Just one last issue on India, the Supreme Court order for states allowing you to charge for the mines with retrospective possibility. You've set aside 17,000.
It is in our contingent liability. We've not provisioned for anything.
But can you give a more exact number? Will all that money be needed?
No.
Has Orissa government come back to you?
No. I think, that was us being conservative. We had a demand notice for 126 crores in 2005, and we fought a case which we won. But since it was being discussed or it was being appealed in the Supreme Court, we just kept a calculation based on that, right? So there's no demand notice for us for that amount. I think we are clarifying that. It's not that we have a demand notice or anything. I think what we are waiting to see from the state government is what is their demand, right? And I think they're themselves conscious that a lot has happened since then. The MMDR Act came in 2014. The government is anyway getting a lot more royalty than they did at that time. The government is conscious that they don't want to kill industry by giving a bill. And it's not just for Tata Steel, it's for the entire mining industry in Odisha, and not just steel. It is coal and bauxite and everything else. So it has a huge impact on industry and the economy in Odisha. So the government is today deciding if there is a demand, what should the demand be. Once we have a demand, then we'll decide. First we will look at the demand and see whether we can contest that. We are a long way from coming to a conclusion on that. And as far as a prospective, this is the retrospective part. As far as the prospective is concerned, we are talking to the government, and the government is also looking at options, because ultimately it's about making sure the industry, not just steel or Tata Steel, the entire downstream industry survives, whether it's aluminium, whether it's cement, because it impacts limestone, power.
And it is jobs and upstream.
Absolutely.
In the entire
So
economy,
I think there needs to be a more considered call, which is what I think both the center and state are trying to do.
But chances are the contingent liability is very conservative, and you may have to let go of much less than that. Okay. On that positive note, Mr. Narendran, pleasure speaking with you. Thank you very much for joining us.